Hi, everyone. Thanks so much for watching and joining our webinar today. Today's webinar is really about communication and how we can show our insurance clients and our prospects their options and help them pick the best possible product for their needs. We find in today's society far too many people are uneducated when it comes to their insurance, and really it's a broader problem of financial literacy. We also aim to find some solutions to help you better position these products and save yourself some time while doing it. Just to introduce myself a little bit, I'm Chief Technology Officer of Life Design Analysis, and we pioneered the software actually from working in the field. I was introduced to the insurance industry by my stepfather, a 50-year veteran. And it really stemmed when he started to sell me insurance and show me my insurance options. I remember the first day I went into his office to, he asked, how can you help me and use technology to help me work smarter, not harder? In understanding his business, I said, pitch me as a consumer and show me my insurance options. And, he put down on the table for me a T10 illustration or a term 10 illustration, a term 20, and a universal life to show me, here are some of the different products I sell. He also showed me all the different companies as an independent advisor he can process. But my big takeaway when he put down my three options there, were that life insurance is confusing. I mean, again, this was all one company that he had provided me, but the number of pages in the illustration totaled something around the 43-page mark. And again, this was really two classes of the three products. So he had some term in there, varying different lengths, and a universal life. But, for an industry with only three products, term, UL, and whole life, we do find quite a bit of confusion. Now, I usually do this presentation in front of advisors, and I say, people in general are confused by life insurance. And I ask them and I say, what percentage of people do you feel are confused by life insurance? And a lot of them will throw, 40%, 50%. Usually someone in the room says 100%, which is actually not too far off. I think, again, when we look at the industry trends, we actually see that it's something close to 90% of people are confused by their insurance options. And I like to bring up an article. And again, I like to, kind of show this that, I'm not just choosing certain stats. Again, this is a survey done by BMO Insurance. It was posted in advisor.ca a number of years ago. But that I sort of round it. You can see it says the survey finds that 88% of people are not familiar with the different types of life insurance options available to them. And I basically round that to 9 out of 10 just to make it a little bit more simple. I really find the interesting part, though, below where it says that 63% of the respondents, so those same people who said that they're confused, say that the best time to buy is as soon as you can afford it. And that really tells me something about consumers and their position. I mean, it tells me that they're stuck. And I pull up another article, this one from the Insurance and Investment Journal. It is a LIMRA study, so it's more U.S. focused. But again, the same sort of ratio applies here in Canada. And this one states that 19 million potential insurance buyers are stuck, meaning they know they need coverage, but they're not taking action because they're confused by the language. And again, they recommend drawing illustrations. And I'm going to really kind of highlight that visual point of, sort of why we recommend drawing something as opposed to text and numbers, and really leverage off that. Okay, so if we know that consumers are confused with their insurance options, again, I think that's not really a surprise to a lot of advisors out there, especially those ones who shout at 100%. But what do consumers feel about their needs when they're purchasing these kind of financial products or even insurance products? So, again, we know we're confusing them, but what's important to them, the consumer? Now, this is an Accenture study, Generation D, an emerging important investor segment. And it's really demographic factors that are more surveying those 9 out of 10 or the 10 clients on the other side and saying, what's important to you when you're purchasing financial products? And you can see the changing demographics. So as we look at the boomers here in green, these are our older clients. We've got Gen X and millennials. And it's important to note that millennials are actually the biggest purchasing group out there as far as population. So when we think about, our future prospects, they're really going to come from that millennial bracket. But again, you can see this kind of changing role of advice as we start with boomers who are maybe more apt to just, here's my recommendation and that's what they go with. You can see, I would never take the advice of my financial advisor without first consulting another source. So again, we can sort of see this changing trend of maybe it's a trust factor because of, again, some global economic conditions that have happened, things like 2008. Maybe it's just there's more information out there. So again, we want to fact check and we want to learn for ourselves and see, really what information is best for our own practice. Again, you can see the second point, I spend a lot of time researching alternatives before making a major purchase decision. So again, we might recommend some whole life, but they want to know why that compares and why it's better than investing it in the stock market or any other vehicle that they may have the option on. So again, maybe the fact that we have more options leads to more confusion because now there's an opportunity cost to picking the wrong one. But I feel the last one, and again, you can see I've highlighted it here. I think it's really the most important, again, relating back to if 9 out of 10 of our consumers are actually confused by the products and they all say, or the majority of these people, again, regardless of generation, say, I need to fully understand all the different options and outcomes before I feel in control. So again, if they don't feel in control, that leads to that stuckness. Again, and they're not understanding the product, and so therefore they're taking no action, which is, again, even some action with the wrong product would ultimately, be somewhat better than no action at all, because then there's no protection. So again, if we know that 9 out of 10 consumers are confused, but they need, to be informed to make a decision, what's causing this communication, and let's call it an education gap, and then how can we solve it? Now, most of these people, and in fact, most people in general, are visual learners who will retain more information, retain it faster, and actually, again, be able to process a lot more information. So most people are visual learners, but, I always like to prove this again. I say, don't take my word for it. Again, a lot of you will say, I really relate, I'm a visual learner. Again, which better communicates the message to you? Think about driving down the highway, and if we had road signs, again, when we look at this, we immediately know what this means. It doesn't have to be French, English. It doesn't have to be complicated. We immediately know this means caution, falling rocks. But if you had to put this into text, again, it would take a lot more time to process that information. If it was, while you're traveling down this road, there's a chance one or more rocks of varying size may fall from the slopes. So again, we retain a lot more information when it's visual, and we also get to that point a lot quicker. So again, when we have an education or communication gap, we really want to leverage visuals in that method. And again, we're going to combine it with text and numbers. Now, one of the problems is that we show this to clients. And again, I really highlight at the top here that this is page 4 of 14. And again, it's all text and numbers. So if I'm the consumer and this is one of my 3 options, again, I'm going to have about 35 pieces of paper in front of me, or I'm going to have about 45 pieces of paper in front of me, all text and numbers, all different formats. And again, I'm going to have to leaf through to certain pages to find this information. And that causes a lot of confusion. It causes a lot of doubt and uncertainty. And again, if we're uncertain about our options, the result is we take no action. So I like to point out, it doesn't matter how much intelligence you have, your skill and talent, even your personality, or the substance of the discussion. If we can't actually properly communicate that to our end user, that really trumps everything, because again, all the latter doesn't matter if they're not actually fully understanding it, because that becomes the most important thing for consumers. Now, I don't want to show, anything but problems, but I do want to show that Life Design Analysis was designed to tackle these problems. And some of the things that it does is it will search all insurance options for the clients. It will be able to analyze the results and compare them, things like present value and IRR, things like we want to dive into some financial calculations. It's all going to be advisor branded. And again, you get notifications on things like when clients view your presentations and policy opportunities and things like that. Now, it does come with a 30-day risk-free trial. So, what I'm about to show you is something that you can try on your own. And again, it is all web-based, so this is something that works equally well from any brand of computer, but also tablets and things like that. So again, when we think about bringing information to our clients and having information accessible, again, ours is a great system to tackle a lot of these problems around education and how we can actually ultimately communicate it to our clients. Again, I'm going to log into my account here, and we're going to go over a few different features. We're going to show basically how to do a proper policy review, how we can position products over time, and really help our clients see the best products possible. We're going to cover a little bit of needs analysis as well, and how we can document and establish a need, and how we stay on pertinent opportunities and things like that coming up. Now, one of the first things I do recommend is when you do start with our system, if you're doing some of these comparisons, brand the account and get it really personalized for you. So take a 2 minutes to upload your logo, choose things like color, and even customize the Life Guide integration so that you can really specify on the carriers that you're actually licensed with and use them in the search, but also your kind of default search results. So again, if you like to do things monthly versus annually. When you do, again, get that all customized, there are things that you can do in the system. The biggest one that I mentioned, again, is comparing products for your clients. And we're going to run through a couple different case studies to really show you how to position products over time. Again, remembering all that the cases that you do inside the system are managed and saved. So, this is something that you can start in the office and pick up at home. It's also great from a compliance standpoint when you want to actually document your suitability analysis. Again, you can see, I turned the system live in 2014, and I actually have a record of every single case that I've worked on since that time. So again, if I ever have to go back and say, how I decided that a term conversion was appropriate for my client and what other products did I compare it against, again, I actually have all that information at my fingertips. Again, some of the things we'll touch on a little bit later are things like mining your block of business and how do we see the opportunity of past policies we've sold and how to stay on top of them. Well, that's done through the Manage Clients section. So again, you can import your block of business and run certain filters like looking at Term 10 conversions and filtering out all of our Term 10 that's actually coming due. These are perfect opportunities for a policy review. They can outline gaps in our client's coverage, show certain opportunities of converting to permanent now, or even replacing. But again, these are our policyholders. We cannot afford to have them, not be informed about what's happening to their policy around the anniversary and then have it lapse as a result. And again, if we can't prove that we've actually done our due diligence, it can become a big liability. But again, you're going to get notifications in the system on things like Term 10 conversion opportunities, certain exchange opportunities with inside Term 10 products, as well as Term 20 opportunities. And again, there's lots of other notifications, things like birth dates or when a client views your case. I can't get into all of them today, but again, we can help you explore those kind of opportunities later. Now, we also have needs analysis tools in the system. And again, we find this is a very important part of establishing how much insurance that we get for a person. So let's use this as our first topic and our starting off point of, how we might look at and review and come up with a number for someone's needs as far as insurance goes. So again, anything put into a current insurance, and again, we'd like them to think about what will be in force at life expectancy. So this might be permanent insurance. Anything used in these fields like assets is going to be actually used against that total insurance need. So if I say I have $100,000 of current insurance and maybe I have $30,000, that I'd be willing to liquidate at the time of death. I have maybe a nice mortgage, and let's focus this maybe around someone who's just purchased a new house. So I'm going to say I've purchased a $500,000 house. Again, some in Toronto and Vancouver might be laughing at me right now, but we'll pick something middle of the road here. Again, we also might want to build in some income replacement, and I do see a lot of different, schools of thought around how long we should replace income for. Should it be a preservation or depletion strategy? I'm going to pick a simple, just kind of raw accumulation of $60,000 for 10 years. And again, I can adjust these number of years to say I want more of a preservation strategy or more of a depletion by, taking away a certain number of years as well. Sometimes it's better to overplan for the insurance. Not to say you should have your clients overinsured, but there's not too many spouses out there. If their spouse passes away, they're complaining about too much insurance. Now, again, we can build in things like education costs for our children. It scares me that $20,000 per year is probably too low for my two girls, but that is the nature of it. And again, even things like household debt. This would be things like credit cards, line of credits, any other kind of debt. So maybe there's a boat or something like that they've got in there. Now, again, I want to include some last expenses and funeral costs, but you also have the option for a custom label. So really anything at all that you'd like to put in there. One of the items that I really like is the idea of planting the seed about a charitable gift. So a lot of people already give to charity, but they don't even realize that life insurance is really efficient vehicle to actually increase the impact of their donation. And so you might, if you're planning or you're doing something in this market, again, you might plan to add other things like a charitable gift just to let your clients know about them. So again, we can build this really nice looking needs analysis that is actually going to be all interactive. And again, not only that, we can actually attach it to a client file so that we have it in the future, or even use it as the jumping off point to build a case. And again, as I said, I'm going to build my first case around a mortgage need. So I'm actually going to say, let's select a sample client. I'm going to say my sample client. And again, once you've entered a client in our system, as I say, it's actually, you don't have the need to enter it again because it's going to manage that client and save it. Now you can see as I've jumped from a needs analysis into a presentation, it's auto-populated, sort of that insurance amount. Just keep in mind, if you wanted to change this at any point and work with more of an even number, again, you can specify any sort of insurance benefit. So even if you were just focused on, $1 million or $500,000 just for that mortgage, you could adjust this, but still have your needs analysis on file. Now, this is the design case screen, and really from here, this is very much like saying that add new case where you can compare any different options. So, you as the advisor know your clients really the best, and you know what's important to them, and sometimes you even know what they have the ability to pay as far as premium, so you can customize the product to fit those kind of needs. But sometimes you just want to show them options and help kind of sell them over time. I find far too often those clients who are actually going and researching the market and finding the best rate, they're finding the best term 10 rate out there, but they're trying to, secure, and the whole purpose of buying the insurance is for a 25-year mortgage. And again, it's so important to match the insurance need with the actual product. But again, if it's too complex to get all these different quotes and compare their pricing, again, we're going to tune out and we're going to go with the cheapest option. So again, we can be very granular about what products we pick, but I'm going to go with a specific recipe in this case and say that we're looking for a T10 versus T20 versus T25. And again, this is going to be perfect for our mortgage scenario. Most of the mortgages I find in Canada are 25 years. But again, if you have a client with a different length of mortgage, you can certainly adjust these with either a different recipe or by individually selecting product. Again, you can see I'm searching regular health risk. I'm doing it annually, and I'm searching my preferred companies, though I can always do all companies or a specific one. And I'm going to say add recipe. So again, for someone coming to us with a mortgage, we don't just want to get them the best term 10 rate. We want to show them some options. So what our software has done here is it's gone to the market and found the best term 10, the best term 20, and the best term 25 out of the carriers that I have set in there that I'm licensed with. Now, all you as the advisor have to do is click Generate Report, and I'm going to show you again how we can better communicate these options to our clients so they're not just focused on the cheapest option, they see really how these options play out over the time that they have the mortgage or really satisfying the need. So again, within a couple seconds and a few clicks, we're going to have an advisor branded report that's presented for our client. And again, a lot of this comes down to the professionalism that, it looks like we've done our homework, and quite frankly, we have. We've done the due diligence of searching out the best product and now putting them together in a comparison. Again, all properly dated, and it's going to link back to your website. Now, again, I mentioned in the account settings that there are ways to customize these presentations with, a unique mission statement that appeals to your brand or your market, and of course, a strong disclaimer in there. Now, again, we started off with the needs analysis, so this is a great way to kind of establish the need and again, start our presentation by saying, this is why we think we need insurance. Though, if we have overshot the total amount and our client isn't responsive to certain items, like let's say the charitable gift, again, I can uncheck that and have that total recalculate. Clients might also say things like, well, I'm paying down that household debt, or they might even, again, I know this presentation is based around a mortgage, but they may say I'm paying down the mortgage. And again, we can still look at how much permanent insurance they may need versus term insurance and look at layering and things like that. So again, a very effective needs analysis because of the interactive nature and showing how these needs change. Now again, as we go down, we're going to see a premium schedule. And if you think back to my kind of initial presentation on how many pages some of those illustrations are to simply get the information out, imagine an advisor going, here's RBC, it's the best price, here's Manulife best price, and here's IA Excellent. I mean, we'd have to go into 3 different illustration softwares, print out all the information, have it all in different formats, and then hope that our client could actually, kind of see the differences in premium and actually see the value of what appears to be, again, a more expensive product. So again, we're asking to go from $1,500 to $3,000 or $4,300. So again, we are saying they obviously have different pricing schedules, but how do we show them that value? Well, just as in the road sign example before when I showed the falling rocks, a visual can communicate all this text and numbers in a much more effective way. So when we look at yellow here being the term 10, and again, it hits that renewal point at 10 years, it hits another renewal point at 20 years. We see the T20 a little bit more expensive, and then the term 25 a little bit more expensive again, but put in relation to the renewals and what's going to happen to these term products over time, again, it will really put that into perspective of as far as cost for your clients. So little increase initially to save a huge one later. Now, I know a lot of advisors are thinking, well, what if they repurchased here? Again, that assumes some risk that they would be healthy enough at age 60, and that pricing would be the same. But I'm also going to show you an option, if you would like, to illustrate this as a repurchase as well. So I'll get to that after I finish this case study. Now, usually when clients see this, they really understand the patterns of these term products better. There still is a lot of confusion around term and length, and does it just lapse after that 10 years? What is a guaranteed renewal? We can get around a lot of that confusion by showing a very simple visual of the premium schedule, and I quite like this one, again, for helping the client focus on their age. So I like them to think about, even at age 70, would you be able to afford that renewal if you were not medically healthy? Or would you want to take that risk, considering that this one here is locked in for that time period that we're protecting, in this case, the mortgage? Now, again, we want to show them, really, at the end of the day, what does it all cost? Because quite frankly, that is what a lot of people, consumers, want to know. Now, I've done this one in raw accumulation, but we can also do it as a present value, and I'll show that in a little bit as well as we build out these case studies and show how we can stress test our different scenarios, but really, again, do the best due diligence for our clients of saying, what is the best product for your need? Again, you can see here at the end of 25 years, we have one product at $108,000 versus $241 for the term 20 versus $315 for the term 10. So again, just by showing them the pattern of what can happen to term insurance over time, we help them identify with a very simple visual what the best product for their needs are. Again, we break it down into a very nice presentation summary as well, and this is something, of course, that you can print out and generate a PDF of. I'll also get into how we can share this with our clients in a little bit as well. Again, even things like internal rate of return. Now, at the very end of the presentation, we're going to see a nice cover, sort of an end page with all of our contact details, so that when an advisor, again, gives out one of these presentations, we want to have our clients be able to get in touch with us. Now, there was two different points that we brought up in this that could be potentially looked upon and said, maybe we'd want to look at it a little different. Well, I want to go back to the case and really just show that. So one of the points was that, we may purchase this T10, but we may be healthy at age 60, in my case, because my client is a 50-year-old, to repurchase it. So let's delete this product for a moment here. Perfect. And let's add from our regular search items here, let's add a regular product. And again, I'm going to do a term product. In this case, we're actually going to make the assumption that the client's going to stay healthy and that pricing is going to be the same. Again, those are two really, really big assumptions, but sometimes we need to stress test and really prove to our clients, or maybe handle an objection in some cases about what happens to term 10 over the ages. So I'm going to do an individual search for term 10 here, but you can see I can do it for any different length product. And again, this would work with any length of product as well. And I'm going to repeat the search just in this case for an individual term 10. So you can see where it got that quote from when it did the original recipe. And again, you can see I have all the different companies on the market to choose from. So again, I can go down the survey. It's going to tell me how different they are from the top result and really do a kind of a comparison of just term 10 products on its own right here. And again, feel free to pick any of these different products. They're all really in the top ranking or very close to each other. The thing I wanted to point out in this one, and I'm going to go up to Equitable Life's product here because it is the highest one of the highest ranked products with a good conversion in there. So I'm going to use this in my example. But again, if I want to compare this, but every 10 years reissue it as if my client is healthy, I also have the option to add to the case's reissue. I can even lapse it before a guaranteed renewal ever happens and illustrate it either way. I'm going to do it as a reissue here though and say, we're making the assumption our client stays healthy and that term pricing stays the same. And I think, again, client health is really the biggest assumption there. Now, just like before, again, we've got our term 10, term 20, and term 25. The only difference being that this term 10 is reissued every 10 years. I want to point out, though, that there are lots of different controls that you can use with your presentation. So we're specifically saying, look at this for 25 years or until age 75. You can always adjust this to look out to age 99. You can also, one of the things that I mentioned was calculate with a present value. So some people may say that in the future, those term renewals are not as drastic because of things like inflation and the dollar not being worth quite as much. Again, if you want to turn on a present value and calculate with PV, you of course can. A very neat thing about our software is that you can actually control that R rate, the R value in the calculation, on your own simply by changing this. So again, 1.5 has been pretty consistent for inflation, but if we really are looking over the next 20 to 30 years, we'll likely see a higher rate of inflation. Now again, you have the control to set this at whatever you'd like. So again, feel free to get more aggressive with this. But again, let's put in a term 10 here, reissued every 10 years versus our other two products. And see, even with a PV applied of 2% for inflation, if this term 10 was actually a better option, or if we're just taking unnecessary risk compared to locking in for a T25 right now. So again, same report generates here. We're going to go through our mission statement. We've got a nice needs analysis, and now we've got a new presentation schedule. So the guaranteed renewal is not going to be as drastic, but we're still going to see a price increase because the client is aging and repurchasing at new age. And again, you can see we've put in our big disclaimer here saying assumes good health and current pricing. I'd really just stress that the client's got to be Superman and keep healthy without a rating here. Again, you're going to see a little bit of a tilted chart because in the future, again, we're adjusting these for present value of what happens to, future premiums. So again, we want to see that even if with the present value and taking all that risk, what was the best product at the end of the day and what was the best pricing for a consumer? And again, this is a great way to stress test it if you do get some of these objections. But really, again, it's no surprise that term 25, again, a product suited exactly for that client's needs, is the most cost effective. Even if we reissue that term and stay perfectly healthy, even if we consider a present value. So it's those kind of comparisons that can really highlight the best product for a client, give them the confidence and that understanding of, okay, I understand why my advisor, it's not just an upsell, it actually fits my needs the best and is the lowest cost as a result. And again, that's one way we can help our clients get educated and as a result sell a lot more to them, but probably more importantly, get them protected. So I want to do another case study here, and in this one I want to review a whole life policy or something maybe a little bit longer term. So what I'm going to do is I'm going to show you how you can go from a managed client here and get a, basically let's say we have a client with an existing policy and build a policy review. Again, this is going to be encouraging us to not have exposure and liability for not showing our clients these options, but also hopefully we get to make a sale out of it because, again, ideally our client could be in a better product for their specific needs. So I'm going to pull up Charlie Conron here, this one client, just from the top of my list. And you can see this is, of course, myself. I've got myself in here at age 47. And again, you can see I've done quite a few different comparisons on myself. So again, this is a good kind of indication of using our software. All the different kind of comparisons or quotes that you perform are going to be documented. So you can make unlimited. You can also see a separate policies tab. And these are existing policies that I've either imported or actually gone in. And you can see this one that ends in 8 here. You can actually see I can go in and enter in the full renewal schedule. So this one, we can actually set in a renewal schedule here when it's renewable to and an issue date and actually save this information to be used. Now, let's create a new case on this. And again, this case is going to be a policy review for a potential opportunity, and the system will notify of certain policy opportunities. We know that this one was $1 million here, so we're going to set it in there. And basically what we're going to do is we're going to say we want to add an existing policy. So we're going to use a plus manual, and we're going to say it's a term 10 because that's what was in our client file. Now, again, you can see you do have the ability to import, so we could build one out manually, but I'm going to import those policy details for the sake of brevity here, though I can change certain things. Like I could say this is an existing policy, so I don't just have to call this a term 10. I can say this is existing term 10. I could say this is your existing term 10. The whole idea is to make it easier for your consumers to understand, this is their product. This is the premium schedule that they have. So again, you can see that guaranteed renewal schedule in there. And again, I can save this as a plan. And that's basically going to add exactly what they have existing. Now, the neat thing about our system is that when you give it an issue date, it will recognize when the policy was issued, in this case, May 17th, 2014, and it will always know today's date, so it'll always be able to properly review it. Now, let's take a look. We've picked a term 10 that's existing. Let's build out a comparison showing them their term conversion options. So, let's pretend here, and I'm just going to use the search rates. I won't focus really too much on what company this is, but we'll say we're going to search for just a minimum funded UL here. Again, I'm going to search again out of the companies that I'm licensed with. And again, if it was a BMO product here, we'd see BMO. We've got Sun Life, and so forth. So again, we can go down the survey and pick which ones we'd like. Now, I'm going to pretend that this is an Equitable Life policy because I believe that's where I pulled it from. This is actually it has a real pricing schedule from it. And I'm going to say we're going to compare this term policy to a minimum funded UL. So basically our minimum level of permanent coverage. And again, you can see I'm analyzing to age 99. Again, I want the client to look out over the big picture and see, their whole life. And basically this is what we've purchased, but it may be a good time to look at locking in for permanent coverage. So let's generate the report and see what it looks like here and see again how we can communicate these options better to our clients and help them really see the value in long-term coverage. So again, a report generates. We've got our great logo on there. We've got a nice mission statement. And again, this unique client, they do not have the needs analysis attached to them. Now, what we will see though is an existing premium schedule here. So again, we've got the existing term 10, and because of that issue date that we gave it in 2014, you can see that it's 3 years old. So again, it's recognized that there's only 7 years left until that renewal comes. And again, we can see the following pricing schedule from there on out. Again, we can also see what we're converting it to, so a level locked in premium here. And again, it's that visual idea of how do we communicate the differences visually. So again, even though this policy is fairly new, in doing an annual review, we can really highlight to our clients why they may want to convert. And again, you could look at this existing policy, again, even assuming good health and doing that reissue. But I think it really highlights that, that perspective issue of here's where that policy is going versus what it is today. So when we really look at it, even if we PV it, this one's done in raw accumulation. But again, it's that simple visual of communicating these are the pricing patterns. And again, if you would you rather climb the mountain when you're younger or do it when you're older to reach the summit? And again, it really highlights that, even well before life expectancy, it's going to cost less money for the permanent product and it's going to have coverage for your whole life. So again, it makes more economic sense and it's also a nice upsell. I don't like to think about it as an upsell. I really, again, focus around, how we can make this product look more appealing to our clients. Now, again, you can see great comparison there of the different product values. Again, even looking at an internal rate of return, we can see before life expectancy for this client, we're again proving a better internal rate of return. So if you're looking at proving this to a CA, or again something that takes into account some time, IRR is again a great metric at comparing different vehicles with again different time frames, different premium inputs, and different results output. So again, really great way to analyze these. Now let's go back to this case, and again maybe we want to add a little bit of whole life. So life design analysis does have two different options for adding whole life. And I want to show that, again, you can search the rates here and again, survey the whole market. Sometimes though, advisors will want to create very customized quotes. So again, in thinking about doing this one as an Equitable Life, I want to show that we can, not only we can search these rates here and pick products from this. But if we also go back to the case, we can even bring in your custom spreadsheets that you would be designing in the illustration software. And again, you can see this, we can do this from any different company. In this case, again, we're doing an Equitable Life term conversion. So I want to show that we can also use the spreadsheet from their software too. So I'm just going to say plus whole life, select the company. And once you've selected the company, you can see there's options to either import the spreadsheet file or paste the spreadsheet data. Now, I know a lot of you are familiar with producing PDFs out of the illustration software. Well, again, what we can do is basically when you design your quote, and again, this can be any kind of face amount, pay duration, term riders, dividend option, even policy withdrawals and loans. As opposed to looking at the actual view report, what we want to look for is the view spreadsheet data button. And there's usually a table and then the ability to export to Excel from any different carrier software. And again, we have unique videos for each one of these, but the process is identical. When we click export to Excel, it's going to send all of this information about the quote we've created with a ton of information. Again, it comes with different dividend information, ACB, all of the information that we'd really need. Now, basically what we do is we either save the entire spreadsheet. So I'm going to save this to my desktop and say it's Equitable Life and save it. Or you could copy and paste all that information. Now, again, as I said, I'm importing the entire spreadsheet. So I'm just going to select the file, and it was this one that we'd saved. and it uploads all the details of that file. Now again, we can give it custom names to really tackle exactly what product we've added. So again, I can say, this is the estate builder, and I can give it a unique description. So I could say this is a guaranteed 20 pay. And I might add some other information as well, depending on what you've created. For example, if you've used things like term riders. And again, this is supposed to be accompanied with the actual illustration, of course, but a lot of times we need to get our clients there in the first place and show them the value of converting before we can get to, that discussion around a sale and things like that. So once we get the product in there, again, we can generate a report and review the different options that a client has. But again, this is going from something potentially in our block of business where we can then scale these reviews to lots of different clients. And again, we can say, here's what you've purchased, but I want to show you your different options. And again, we're being very transparent over what the options are. But again, the natural benefit of one product over another is really going to come out over these visual comparisons. So again, if you thought that $1,000 was really affordable right now, when you see it over the course of your life, or say the big picture, it really puts into perspective. If that $33,000 was that expensive, how are we ever going to be able to afford that at age 74 when we hit that renewal? Will we be able to pay 61, or does that mean our coverage will lapse here? And again, it's a nice kind of visual to put into perspective when we think about, at 67, is that when we think about retirement age and we want to decrease our actual costs? So again, very nice visuals, very simple. They help us get to that message. And again, it's all about how we can communicate and get through some of this confusion and say, look, at the end of the day, I know that premium seemed a lot higher, but by age 80, that's when the break even is. And again, of course, you can PV this as well. I'm looking at this again in raw accumulation, but again, you can run those kind of the financial scenarios around them, and of course, look at the IRR. Now, again, we don't just want to show cost. So again, yes, this product is definitely more expensive. The whole purpose of whole life is that we're over assuming those mortality costs, and then trying to make it, a return on investment on the actual surplus there. So again, one of the great things about whole life is that we do have a cash value for it, though not all of it is guaranteed. And again, I think that can lead to confidence issues within trying to present these products. So again, if we say to someone that, the cash value, here's the total cash value, but this is not a guaranteed value, well, that leads to uncertainty. And they say, well, how much of it is guaranteed? Well, again, because our software brings in that entire spreadsheet, one of the things that we're really able to do here is, again, put into perspective how much premium they've put out versus how much cash value they get back. And again, it doesn't take someone very long to see that when this red premium deposits bar equals the green total cash value bar, again, we have more cash than we've paid. But of course, this green value here is not a total cash value number, but we can do things like compare it. So as soon as a consumer finds out that, maybe it's not guaranteed, we might want to focus and say, well, look, here's how much of it is guaranteed. And so by just manipulating or clicking on these legends, I can actually show the guaranteed amount. And again, knowing that this is a guaranteed 20 pay, where we're guaranteed no more premiums than $654,400, I can actually guarantee them that they will have more money in the policy, regardless of what happens, at year 25, and that if they were to cash out, again, we would return all of that premium to them. Now, again, they've issued dividends, almost every single year. Some companies back 130 years. But again, handling that objection and being transparent about the fact that there are total cash values and there are guaranteed cash values. And again, we might also say that, there is a great chance that we would reduce the dividend scenario. But again, in being able to demonstrate value and show how that relates to cost in a visual manner, that's very, very effective at showing these differences. And that's really how we can bridge that communication or that education gap. Because now, instead of someone feeling uncomfortable about not guaranteed and not really knowing how much is, we can demonstrate to them that, we can guarantee the premium dollars back, and there's a likelihood that we will see cash value even in a reduced example. So again, great way to take people through that product, but as well be transparent about it. Again, other things when we talk about jargon, and we talked about drawing pictures before, well, again, something like a paid up edition, and that's the dividend I've chosen for this product, can be very confusing. But again, if we show that our insurance starts at $1 million and grows, again, it's a great way to illustrate what's happening to that paid up edition. and how it grows their insurance benefit. Now, like anything else, again, that value is not guaranteed. So what we can do as well is show our guaranteed face amount here. We could also show what a reduced example would look like, and we can contrast them. And again, even if you're doing different whole life products or an overfunded UL to whole life, these are great ways to vet these strategies and find out what's unique and about each plan, and how it fits your client's needs. Because again, any different age bracket or product type, these can be very different comparisons. So it's really important that we do stress test some of these. Now, again, some of the other things that, again, we can compare are things like credit to the CDA. And again, we've got one whole life product with a spreadsheet, so we can do that. But again, there are other strategies, things like buy term, invest the difference. So again, if we wanted to look at maybe the difference between the whole life and the term 10, we could certainly do that. So again, we've got lots of different, what I call metrics, but again, I can say, let's use the existing term 10 and say we invest the difference. So again, these are sort of more the advanced functionalities of how you can really stress test all these different options for your clients. Because as I say, the younger your client is, they may have more time to invest. They may be very risk averse, but again, I can say that I want to invest the difference at a net rate of 3, meaning they'd have to make around 6% in the market based off this client's tax bracket. And I really want to vet it against, will they invest the difference? Will they be healthy enough to keep buying the term insurance? And will they keep doing it? So I'm going to do a chart of buy term, invest the difference. And again, you can see any one of these pages in the report, if you wanted to get rid of it or add a new one in there. Some of them, as I say, are more objection metrics. But again, it is as easy as checking off each one of these pages that you'd like to have in the report itself. Just in the last couple minutes, I'm going to show 2 other concepts. So the one I wanted to show how we can compare, a term policy that they've purchased, whether, again, using the guaranteed renewals. You could also use one as a reissue to show, even if they remain healthy, how much they'd have to make in investing the difference. But again, all those sort of metrics are available. And again, it puts together a nice presentation for your client. Again, not to say you have to use every single page of the report, but again, you can customize these to the needs that are important to your clients or what you feel will be important to them. Again, comparison of cash values, 0 cash value in the term 10, 0 cash value in that minimum funded UL. And again, we've got the whole life here. And again, it's showing that expiration of the product. If we expand this table here, again, showing the expiration age nearest 85 versus the other 2 products actually going on for life. So again, really powerful kind of comparison for your clients. Now, one of them, again, we had an alternative invest here, and we also had a buy term invest the difference. And you can see, if we take that premium and actually put it in the market, again, they're going to have a more cash value than in the product until about year 18 here. And that's when, again, we're going to start seeing some of those renewals. It's going to give us a lot less money to invest than what goes in that whole life policy. And again, at some point, ultimately, it expires. But because we've had to pay so much for those guaranteed renewals coming out, that buy term invest the difference didn't actually make all that much sense. Again, if we lapse the coverage here at age 64, it may have, but again, that kind of forgoes the whole insurance benefit that we would have had as well. And that's a lot of times, I think, again, the purpose. But sometimes we need to show our clients, look, you can't just keep buying term over time because A, it may not be there for you, and B, even if you do invest the difference, even at 6% steady, because of those guaranteed renewals in the contract, if you're going to actually keep the insurance in place, it may not be a good strategy for you. But again, sometimes we have to visually communicate these, and educate our clients as to the way these products actually operate versus, how they may be well intentioned to. Now, the last thing I want to show you is, sometimes, again, I've talked a little bit about, gearing these presentations to what you think is important to clients. Well, a lot of the times we don't know what's going to be important to our clients, but we can give you a way, and again, this is using the technology to work smarter, not harder. One of the neat things, again, I talked about how you can generate a PDF and print this out. Of course, any printed PDF will lose some of that interactivity. So I want to show you how you can share these cases. So again, at any given point, you can click share, this little button at the top here, and it will create a unique link just to this case. And again, no one will have access to this link unless you provide it to them. As you can see, you can always unshare it later. Now, what I'm going to do is I'm going to copy the link to this case, and I'm going to go into a new window here that's outside my logged in environment, because it will recognize who is the broker and who's the client. Now, I could send this to my client in an email, in a text. I could even post it out to a social media. But what this allows me to do is link my clients to the case. Now you'll notice some things that are a little bit different when we link our client to a case. They don't have the options to change product type. They don't have options to change the time or any of the assumptions that we've made in it. But they do have ability to make comments to you, the advisor. Again, your phone number here is going to be displayed so they can call you if they have any questions. Of course, they can send you an email or link right to your website. But they can go through the report and actually interact with all the different elements. So again, they can view your premium schedule. They can use their mouse and interactively hover over these charts. They can click on certain products and get rid of them and compare just the two. And again, it gives the professionalism that you've done your homework and you're showing these different options. And again, it's really powerful to see how these products compare over time. Again, there's, actuarial science is a little bit of magic, but again, it's really driven around price. So it's, it's sort of one of those things where you will pay now or pay later, but it's really how do we communicate that to our client. Now, getting to know maybe what's important to them or how long they spend on a certain page, again, if we sent them this sort of presentation and they spent most of their time on this cash value page, we would really know what's of interest to them. I want to show you, again, when we share these cases with our clients, we want some insight onto, their behaviors, what they look at, how long they look at it. And again, we want to be notified so that we know when to follow up with them. Well, you can see if I get rid of this and go back to the advisor side, I get out of the client side and I go back to this case, what you will notice is all of a sudden I'll have a brand new notification here. Now this notification is telling me that someone has viewed that case. Now we know it was me, but when you send your clients cases through the shared link, you will get stats on when they view them. And again, you can see I just got a brand new one, so I know my clients visited it. Now, if I take a look at the case, again, you can see I wasn't on there for all that long. It has one visit. I clicked on 5 items in there, and I was on it a total of 1 minute and 10 seconds. So as an advisor, if this is my client, I probably don't want to follow up just yet. But once I see that they've spent a little bit more time on it, I can then follow up at the perfect timing. Now, I can also see as they view different visits, and if I really want to break it down, I can even go into the advanced case sharing statistics where I can see on a per page level, which pages they actually interacted with the most and which ones did they spend the most time on. And it gives me a little bit more insight as to the best ways to follow up with them. And again, you can see per page views. I can see different clicks that they've given. Again, I was on this one for 10 seconds, clicked on this one twice. Again, come down to the cash value. So I can get a little bit more of a sense of my client's engagement as to certain facets. And again, it's going to be really powerful in me positioning product to them. I think that brings us to the end of our presentation. But again, I really want to talk about, again, just reinforcing how important it is to use some of these visuals and communicate better to our clients. Because again, if we can communicate better to those 9 out of 10 clients who are confused by life insurance and show them their options, they're bound to purchase more. And that's going to have a positive effect on their lives. They'll be better protected, and it's going to have a positive